Okay, thank you very much. Good morning, ladies and gentlemen of the media, and let me welcome you all to this press conference. This press conference is special because it marks the 100th meeting of the Monetary Policy Committee since November 2002, when the first meeting was held. It's also special because this is the first time we are doing or holding an in-person MPC press conference in over a year. I think before we get on with the business of the day, permit me to make a few acknowledgements. The story of how far the Bank of Ghana has progressed regarding the reforms to its monetary policy framework, following a sustained period of macroeconomic imbalances characterized by high and volatile inflation. I'm sure most of you will recollect when the bank shifted away from the monetary targeting framework at the time to the new inflation targeting framework, which we think has delivered in allowing us to be able to bring inflation down to the single digit levels. Let me acknowledge Governor Paul Akwa, who took the initial steps in putting into place the institutional arrangements to support the inflation targeting framework in 2001. Other governors who followed, Governor Emisa Ata, Governor Wampa, Governor Ishahaku, all of who contributed to deepen the institutional, operational, and accountability processes underlying the IT regime. Today, we are confident that these efforts have paid off, and the bank is in a better position to deepen the processes in line with the best international practices. The MPC met last week to deliberate on recent global and domestic developments and assess the rates to inflation and the growth outlook. Below is a summary of the developments and key considerations that the committee deliberated on to arrive at a decision on where to position the monetary policy rate. Since the last meeting in March 2021, global growth momentum has strengthened, underpinned by the continued policy support, mass vaccinations, and relaxations of restrictions, especially in the advanced economies. These efforts have helped to improve prospects of a rebound in economic activity, and which has been reflected in the revised IMF April 21 global growth projections to 6%, up from 5.5% in January 2021 projections. Nonetheless, the continued spread of the virus in parts of the world, the emergence of new variants, and the stalled vaccination efforts across emerging market and developing economies is continuing to cloud efforts at fighting the pandemic and thereby creating some uncertainty which could undermine the global recovery efforts. Global financing conditions remain broadly supportive of the recovery process. The persistence of low borrowing costs, declining long-term bond yields, and compressed sovereign bond spreads reflect a reaffirmation of accommodative monetary policy stance by the major central banks. Also, equity markets have strengthened further, sustained by the continued policy support and optimism about global growth prospects, while portfolio flows to emerging market economies rebounded in April 2021. Market participants expect these favorable financing conditions to persist for some time. Global inflation pressures have risen in some advanced and emerging market economies, driven by the sharp rise in commodity prices, especially crude oil prices, and a combination of a surge in demand and supply constraints as economies reopen. Over the medium term, these pressures are projected to ease as the rebound in crude prices is moderated by the projected increase in production by OPEC Plus members beginning May 2021. In addition, the still sizable spare capacity and the significant slack in labor and product markets are expected to weigh in on underlying inflation. In emerging market and frontier economies, currency movements and COVID-related supply-side constraints are expected to continue to drive price movements. In the domestic economy, the recovery process from the pandemic gained some momentum, evidenced by the latest high-frequency indicators. The bank's updated composite index of economic activity registered a strong annual growth of 26.8% in March 2021 compared to a contraction by 1.9% in the corresponding period of 2020. The key drivers of economic activity during the period were domestic consumption, triggered by VAT collections, construction activities, international trading activities, resumption of industrial production activities, and air passenger arrivals. The latest Ghana Purchases Managers Index, which gauges the rate of inventory accumulation by managers of private sector firms and measures dynamics in economic activity, also improved in April 2021. However, the bank's latest confidence surveys, conducted in April 2021, showed some dip in both consumer and business sentiments. Consumer confidence dipped slightly on account of recent increases in petroleum prices at the pump, new taxes, and transportation fares. In a similar direction, the optimism of businesses observed at the last MPC round also softened at this MPC on concerns that the imposition of new taxes and the ongoing electricity maintenance management program will adversely impact operational costs in the short term. Businesses, however, expressed optimism about their company and industry prospects. Recent price developments show that headline inflation dropped sharply from 10.3% in March 2021 to 8.5% in April, almost back to the pre-pandemic levels, and within the medium-term target band of 8 plus or minus 2%. The decline in the April inflation rate was driven by lower food prices and base drift effects. Food inflation dipped markedly to 6.5% in April from 8.8% in March, while non-food inflation rose to 10.2% from 10% over the same comparative period on account of increases in export prices and housing prices. Similar to the trends in headline inflation, underlying inflation pressures eased substantially in April 2021. The bank's core inflation measure, which excludes energy and utility, declined to 8.6% in April from 10.9% in March 2021. However, inflation expectations gauged from a survey of businesses, consumers, and the financial sector inched up in April, reflected in part sentiments again around the tax adjustments and the recent challenges in the power sector. Provisional data on budget execution for the first quarter of 2021 indicated an overall broad cash budget deficit of 2.6% of GDP against a target of 2.5% of GDP. The primary balance also recorded a deficit of 0.7% of GDP compared to a target deficit of 0.4% of GDP. Over the first quarter, total revenue and grants amounted to 12.8 billion Ghana cedis, which is 3% of GDP, lower than the projected 15.8 billion Ghana cedis, 3.7% of GDP. Total expenditures in arrears clearance amounted to 24.3 billion Ghana cedis, that is 5.6% of GDP, against the target of 26.5 billion Ghana cedis, 6.1% of GDP. Financing of the fiscal deficit in the first quarter was mainly from domestic sources, which pushed up the stock of public debt to 304.6 billion Ghana cedis at the end of March 2021, compared with 292.7 billion Ghana cedis at the end of December 2020. Of the total debt stock, domestic debt was 163.6 billion Ghana cedis, that is 37.7% of GDP, while the external debt was 141 billion Ghana cedis, that is 32.5% of GDP. Latest trends in monetary aggregates point to significant expansion in reserve money and sharp growth in broad money supply, reflecting the lingering effects of the liquidity injection and the COVID-related fiscal stimulus programs implemented last year. Reserve money increased by 32% in April 2021 compared with 21.7% in the corresponding period of 2020. Similarly, broad money M2 Plus grew by 25.8% relative to 16.8% over the same corresponding period of 2020. The increased M2 Plus growth was largely driven by the net domestic assets of the banking system. In terms of components, the observed expansion in M2 Plus was reflected in increased growth in currency outside banks and total deposits. Notwithstanding sluggishness in credit demand conditions due to the pandemic, the COVID-related regulatory reliefs and policy measures continue to support lending activities in the banking sector. From the beginning of the year to April 2021, new advances totaled 10.5 billion Ghana cedis, compared to 10.9 billion Ghana cedis for the same period in 2020. Total restructured loans executed by banks to cushion customers severely impacted by the pandemic stood at 4.65 billion Ghana cedis as at March 2021, representing some 9.8% of the industry's loan portfolio. On a year-on-year basis, annual growth in private sector credit as at April 2021 stood at 6.9%, compared with 17.9% in April 2020. Interest rates on government securities traded downwards across the maturity curve. The 91-day and the 182-day Treasury bill rates declined to 12.8% and 13.6% respectively in April 2021, compared with 14.1% and 14.3% respectively in April 2020. Similarly, the rate on the 364-day government instrument declined marginally to 16.5% from 16.7% over the same comparative period. Broadly, the yield on all the medium to long-term government debt instruments declined over the review period relative to the same period last year. The weighted average interbank rate declined to 13.6% from 14%, largely reflecting improved liquidity conditions on the interbank market. This translated into a marginal decline in average lending rates of banks to 12.9% in April 2021 compared to 22.4% recorded in the same period of 2020. The banking sector maintained its resilient performance through to end April 2021 with strong growth in assets, deposits, and investments. Total assets increased by 16.4% to 155.7 billion Ghana cedis. This reflected strong growth in investments in government securities by 34.9% to 73.3 billion Ghana cedis, funded by deposits and loan repayments. Total deposits recorded an annual growth of 24.2% to 104.9 billion Ghana cedis on the back of the strong liquidity flows from the fiscal stimulus and payments to contractors and depositors and clients of defunct SDIs. Overall, the impact of the pandemic on the industry's performance was moderate as banks remained liquid, profitable, and well capitalized. Financial soundness indicators remain strong underpinned by improved solvency, liquidity, and profitability indicators. The industry's capital adequacy ratio of 21.8% as at the end of April 2021 was well above the regulatory minimum threshold of 11.5%. Core liquid assets to short-term liabilities was 24.9% in April 2021 relative to 30.1% in April 2020. Net interest income grew by 18.4% to 4.1 billion, compared to 18.8% over the same comparative period. Net fees and commissions grew stronger by 26.5% to 917.6 million Ghana cedis relative to 8.8% growth during the same period last year, reflecting a gradual recovery in trade finance-related and other ancillary businesses of the banks. Accordingly, operating income rose by 16.8%, marginally higher than the corresponding growth rate of 15.2% a year ago. The banking sector deployed effective cost control measures, which resulted in a 1.7% growth in operating costs over the review period, significantly lower than the 17.8% growth for the same period in 2020. Loan loss provisions, however, increased by 29.4% compared with 7.1% a year ago on account of continued elevated credit risks. Profit before tax increased by 39.6% to 2.3 billion Ghana cedis, recovering from the marginal growth of 7.5% a year ago. Non-performing loans ratio increased marginally from 15% in April 2020 to 15.5% in April 2021, arising partly from the general pandemic-induced repayment challenges, as well as some bank-specific loan recovery challenges. On the external sector, the average prices of gold, cocoa, and crude oil traded next in the year to April 2021. Crude oil prices rebounded strongly and increased by 30% to settle at an average price of $65.3 per barrel compared to $55.3 per barrel in January, supported by production restraints from OPEC Plus and reopened economies as vaccinations expanded across most advanced countries. In contrast, gold prices declined by 5.3% to $1,760.7 per fine ounce on account of stronger US dollar and rising US Treasury yields. Similarly, cocoa prices eased to $2,419.5 per ton in April 2021 compared to the $2,523.9 per ton in January. The decline in cocoa prices was attributed to increased supply in the Ivory Coast. These commodity price trends adversely impacted the trade balance. For the first 4 months of the year, total exports declined marginally by 0.2% year-on-year to $5,131 million, driven mainly by a 21% decline in the volume of gold exported, attributed to instability in the sector. Total imports, on the other hand, rose by $239.3 million to $4,372 million, supported by increased non-oil imports. As a result, the trade balance recorded a surplus of $759.1 million, that is 1.1% of GDP, compared with a surplus of $1,006.3 million, that is 1.4% of GDP in the same period of 2020. Gross international reserves stood at $10,990.3 million at the end of April 2021, providing cover for 5.1 months of imports of goods and services. The reserve level compares with the stock position of 8,624.4 million US dollars, equivalent to 4.1 months of import cover, recorded at the end of December 2020. Cumulatively, the Ghana cedi appreciated by 0.5% against the US dollar in the year to April 2021, compared with a depreciation of 1.2% in the same period of 2020. The Ghana cedi also appreciated by 2.4% against the euro and depreciated by 0.6% against the pound sterling, compared with corresponding 1.4% and 3.7% appreciation over the same period in 2020. To summarize, continued policy support and increased optimism about the COVID-19 vaccinations has significantly improved the outlook and resulted in upward revisions of global growth projections. However, the lack of certainty about further waves of the pandemic, with new variants and vaccination challenges, varying degrees of economic scarring and output losses, and limited fiscal space in emerging market economies, among others, may slow the global recovery process. Although global headline inflation has picked up due to the rebound in crude oil prices and supply constraints, underlying inflation remains subdued due to the sizable spare capacity and the significant slack in labor and product markets, providing some scope to maintain the accommodative monetary policy stance, but with an uncertain outlook. These global conditions, from the committee's perspective, would continue to support favorable financing conditions in the near term. On the domestic front, economic activities have picked up strongly, evidenced by the high-frequency economic indicators. Consumer and business confidence softened, triggered by the new revenue measures and recent instability in power supply, which coincided with the survey period. These have served to dampen sentiments, but are viewed as temporary and should improve in the near term. Private sector credit growth still remains below pre-pandemic levels, but we expect banks to respond to the observed emergence of increased demand for loans to support the expected pickup in economic activity. The banking sector remains sound and profitable, with adequate levels of capital and liquidity to withstand moderate to severe shocks. The industry has witnessed sustained growth in deposits, total assets, profits, and shareholder funds. The COVID-19 policy and regulatory response measures have somewhat helped to mute the effect of the pandemic on corporates and households and are being maintained in the near term. There are signs that the execution of the budget for the first 4 months point to some improved revenue collections and expenditure containment to ensure real realignment to the consolidation path. The fiscal data shows that fiscal revenues have significantly outpaced developments a year ago, but slightly lags behind target. The gap in revenue performance vis-à-vis the budgeted target has been somewhat compensated for by expenditure containment measures. However, in the near term, the committee noted the risks in the fiscal outlook surrounding wage settlements, energy IPP payments, the potential for arrears build-up, the potential for scaled-up expenditures associated with COVID-19, and mass vaccination efforts, and the implementation of the Ghana Cares program, which will have to be carefully managed in a time-consistent manner to minimize any deviation from the path of fiscal consolidation. On growth outlook, the committee's view was that the projected growth in the extractive industries, the steady rollout of the vaccination program and recovery in industry and the services sectors should work their way in supporting a faster closure of the output gap in the medium term. Headline inflation eased sharply to within the medium-term target band, driven mainly by lower food prices and base drift effects, a tight monetary policy stance, and stable exchange rate conditions. Since the initial shock to inflation in April 2020, The forecasts show that inflation will be close to the central target by June 2021. These forecasts remain broadly unchanged, and inflation would remain within the target band in the next quarter. Risks to the inflation outlook appear muted in the near term, but pressures from mostly rents and transport fares would require some monitoring to anchor inflation expectations. Under these circumstances, the committee decided to lower the monetary policy rate by 100 basis points to 13.5%. The committee will continue to monitor price developments closely and take appropriate action where necessary to contain all potential pressures in the inflation outlook. Thank you very much.
Thank you very much, Mr. Governor Chairman.
Governor, we saw from the release earlier, summary of economics that the debt to GDP has gone down to 70.2%. Amid the COVID expenditure and the borrowing and all that, we were expecting it to go higher. This time it's gone down. This what has brought the debt level down. Secondly, an issue has also come to our attention regarding the former customer of GM Bank, who sold his investment to a group in the US, a company in the US called Bearing Group. And we know the GM Bank has been taken up by the receiver. And this Bearing Group has sued the receiver, in this case, $10 million, because it chanced on the confidential information which detailed how the bank was liquidated and all that. But with the arrangements of the receivership in place and the suit, don't you think it's a recipe for disaster where others can also emulate the same and then take the receiver on because of that information in the public? And finally, please update us on the sector cleanup. How much has been recovered so far?
Good morning, Mr. Governor. My name is Elom. I write for the Economic Times newspaper. Mr. Governor, I just want a clarification on the policy rate that you just reduced. I mean, this is the 100th meeting that we are having, and the MPC decided to slash the policy rate by 100 basis points. Thank you very much. But I'm just trying to find out in connection with the recent increase in petroleum prices, which of course we know there's going to be some pressure as far as inflation is concerned. And now that you decided to slash the policy rate, is there something that we don't know? If you can still give us further information on that. My second question is, you said the bank restructured their loan, which cost them close to 4.6 billion. I mean, representing 9.8% of the industry loan portfolio. What are we doing to de-risk the banking sector? My third question has to do with the primary reserves that was reduced by 2% in 2019, which of course made available almost like 2 billion Ghana cedis to the banking sector to on-lend to the SMEs. The money was with Bank of Ghana, and the issue was, banks who are interested in trying to be part of the scheme should get in touch with Bank of Ghana so that the money could be available to them. If you can give us an update on it, and let us know how far the disbursement has gone to support the SMEs. Thank you very much.
My name is George Wiafe from Joy FM. We've seen some recent blips with the Ghana cedi. I engaged a friend in the bank, and she was telling me that it appears that they are now being allowed to remit some of their dividends back to some of these companies, the multinationals. How are you closely monitoring this to ensure that things doesn't get out of hand? Because I remember some time ago, you actually asked these banks to stagger these dividend payments as a measure of controlling the city's stability and all the rest. Does it appear that the Bank of Ghana has gone back on that directive? And how are you ensuring that thing doesn't get out of hand with respect to the city stability that we've seen over the past period? And also, when I look at your reserves, is it that you've had some inflows from somewhere because you've seen it hit about $11 billion? Does it mean that you are not supporting the market, or what is actually happening? Also, I wanted to find out from you, what other policy measures do you think that are needed to ensure that this recovery is kind of widespread? Because we've seen some sectors picking up strongly, but the same cannot be said for other sectors as well. Can we then describe that as a full recovery of the economy, or a lot more things has to be done? Is it more of now a fiscal measure and the monetary policy or the Bank of Ghana has done what they are supposed to do and all those things? I'll be grateful on that one. Lending is still not encouraging, and is the BOG itself worried that maybe you have to put in some measures again to encourage the banks to lend to private businesses? Because if the economy can really be achieved, also credit plays a critical role. But on the flip side, when I engage some of the commercial banks also, they are saying that for those funds that they give out during the pandemic era, in terms of repayment is yet to commence because some of these firms are still struggling. So looking at all these two sides, how do you in one breath encourage lending and also ensure that these credit goes to sectors that can repay so that we don't have a high NPLs in the country? Thank you so much.
Okay, thank you very much for those questions. The first one on the debt to GDP ratio. The question is, how is this possible in the context of higher spending associated with the COVID? I think if you look at the statistical data part that was released by the Bank of Ghana, the decline from the end of December to, I believe this is the March data, is driven by the new projected GDP for 2021. So really, this is what is driving the drop in the debt to GDP ratio to 70%. I think the appropriate comparison should be with a year ago, what the debt to GDP ratio was at the end of March 2020. And then you will see that the direction is up rather than down. So this is really the statistical explanation for the decline in the debt to GDP ratio. But I think the discussion on debt to GDP is probably being overflowed. There are so many ways in which you can assess, the sustainability of the debt situation in Ghana. I mean, you can look at some other indicators. I put up quite a long list of them the other day in the MPC meeting. Looking at debt to revenue ratio, that's another measure. External debt to export ratio, that's another measure. One can look at whether the debt is being held by residents or non-residents. You can look at the liquidity measures, the debt service to revenue ratio. You can also look at the debt service to GDP ratio. I think that we are too focused on one particular ratio and using that to make assessments of debt sustainability. But there are different dimensions that one can look at this debt issue. And I believe that the public discourse needs to diversify a little bit more in terms of the indicators that are used to make that assessments. We all agree that if you use some of these debt indicators that are used for low-income countries, then you define Ghana as a high-risk country, high risk in terms of debt sustainability. But if you look at the fact that this is a country that has market access to international capital markets, and this is really what we have done in the last few years, we've had access to borrowing. And when you have that access to international capital market. It changes the outlook a little bit, and one has to take all of those issues into consideration when having discussions on the debt. This question on the JN Bank, I believe, is the next question. I thought you would congratulate the Bank of Ghana for the work that was done in trying to identify the problems in that bank. Many people were out there vilifying that they were on a witch hunt. But now you've had people outside this country, suing GN Bank for the same reason. So those who thought that we really didn't have a basis of what we did, now the evidence is out there that what the Bank of Ghana was trying to do was the appropriate thing. And I think another lesson that can be learned is the speed with which the system in the US works. I mean, we are still grappling with these issues in our Ghanaian courts and not really making any headway. We've been at this reform for the last 3 years, and we are not really making, the necessary impact in terms of going after these shareholders and directors who have been responsible for the malaise that we saw in the sector, and having them, bring back the assets that they have taken out of the banks. Your concern was about the fact that the bearing people sued the receiver, I believe. And they may have the reasons for doing that. But I'm not worried that others may take a cue from that to also sue the receiver. The bulk of the bearing case relies on evidence that was generated from Ghana, the work that the Bank of Ghana has done. Now, to move away from that controversy, I know it's a very controversial matter, but I have told you what I think. And back to monetary policy, which I prefer to discuss at this meeting. Yes. And this is the question from Elo on the justification of the policy rate reduction that we have just done. I think it's very simple. If you look at the behavior of the decisions that we have been taking over the last 3 years, as we see progress in the economy, we see progress in inflation coming down, and we bring down the policy rate to, in a sense, signal that progress. The last time we did that was very early in 2020, and then soon after that we got this COVID shock, which sort of led to a temporary blip in prices. Therefore, we saw inflation go up. And then after that, the policy committee could not take any other decision but to leave the policy rate where it was. Now, to complicate matters, this was also an election year. So as we went down the line in 2020, last quarter of the year, we were not about to, reduce the policy rate within that context where we were not sure what all of that stands, relative to the election, what that would mean for inflation and the growth. And so the prudent thing to do was to keep the policy rate where it was. Now, come 2021, that whole risk associated with the election is behind us. And then we look at the numbers. You have seen that the global environment has improved somewhat, especially the global financing conditions, which we were quite concerned about, but it appears that it's continued to remain favorable. In the first 2-3 months of this year, we have seen non-residents come back into our domestic bond market, so we have attracted some non-resident flows. Then in April, we have had this big drop in inflation. I think all the arguments are there that what is the central bank waiting for? You are not going to wait for another complication, which will stop you from resuming your policy rate adjustment in line with the improvements that we have seen. So, Elon, really, this is the justification for bringing the policy rate down at this round of the MPC meeting. But yes, it also reflects confidence on the part of the committee that the recent increases in petroleum prices and all of these administered price changes that we have seen will not necessarily translate into inflation. If you have the appropriate monetary policy conditions, we think that the conditions are relatively tight. And you need these kinds of relative price adjustments, to propagate themselves into inflation. They themselves does not mean that you have higher inflation. It's what happens, the second round effect and the third round effect of such relative price adjustments are what matters. And we don't foresee that we will see any higher increases in inflation due to these administered price increases. So really, this is the best way I can explain why we decided to drop the policy rate. Coincidentally, this is the 100 basis point for 100 MPC meeting. I think that's what makes it a little bit interesting. Then your next question was on restructuring the loan portfolio. I think there's a 4.6 billion which is reported to have been restructured because of COVID. And you are talking about the need for de-risking the banking sector. I mean, this is a big, big topic. We can all see in terms of, what the banks have been doing and the increase in government investments being held by the banks over the past year. On one hand, we are concerned that the banks are not investing in the private sector, why they are not lending and properly intermediating. And then on the other hand, we are also concerned about the NPLs in the economy. And this is really why the banks are being so risk averse in lending to the private sector. If you look at the list of the 100 the large adversely classified loans, and you see the type of enterprises that are in there, we have a problem. And these are firms that we know, you and I know, but it appears that we have loans that are not performing, and some of them have become serial borrowers, and they do not service their debt. I think that culture has to be changed. People who borrow and they think that they cannot pay. And when you do that, you create these types of difficulties. And then we get up and complain that the banks are not lending. But why would they lend if they are only going to be throwing customer deposits after, bad risk? Unfortunately, our judicial system is also not helping. And they try to enforce the collaterals, and these cases go on and on, adjournment after adjournment. So it's the environment, really. I mean, the environment does not help in addressing this problem of lending to the private sector. We have the collateral registry, you have the credit reference bureau. I mean, all of these were put into place in order to help the banks better assess their risks. Unfortunately, for one reason or the other, these things do not seem to be helping. So there's a lot of work that has to be done in terms of, as you put it, de-risking that private sector. And I think that part of that work involves a cultural change of businessmen and the way they treat, borrowed money. Because these are not free money. These are deposit monies from you and I that the banks lend out, and they have to be recovered somewhat. So yes, this is the situation that we are seeing. The banks have an incentive to put their resources into government paper. Obviously, we would have wished that they would do otherwise. And we are going to be working with them to gradually sort of move away from the over-reliance on the investments in government paper. It would have to be done gradually. The government itself would have to reduce its demand for funds from the market to allow that to happen effectively. The issue of the primary reserves, we had originally asked that these freed primary reserves should be on lent to the private sector. I think most of them have found their way into the government investments anyway. It's an issue that we are currently engaging the banks on. So I think you raised an issue that it's important for all of us, and we would put quite a lot of resources towards addressing this issue. Then George Uyafi goes into the issue of the blips in the Ghana city because of this time of the year, repatriation of profits and dividends and all of that. I mean, this is a matter that we were discussing this morning, and this is not the first time that they are doing that. And therefore, we engage with some of the big multinationals to do this in an orderly manner, such that you would not see, these outflows impacting negatively on the exchange rate. And just this morning, I requested to have a meeting with some of these multinationals so that we can, face the outflows in the manner that will not destabilize our market. Yes, our gross reserves is at 11 billion, nearly almost $11 billion. The reason is because of the recent sovereign bond issue, which came in to almost, this was in April or so, April, right? Yeah, so principally that is what it's reflecting in the gross reserves of the central bank. I should say that the projected outflows for the year are also quite significant. So yes, we have an 11 billion reserves, but we also have quite heavy loan repayments to undertake in 2021. And we are currently looking at the projected build-up for 2021. This is the work that we are trying to do. We are struggling to build up reserves in 2021, even though we have an 11 billion gross reserves as of the end of May. It tells you the burden of debt, of amortization of debt and interest payments that we have for the rest of the year. Your characterization of the recovery as not broad-based enough. On the contrary, I think that a lot of the improvements that we are seeing are coming from the sectors that were impacted mostly. If you look at the data more closely, it's the service sector, the education sector. Those are the ones that are recovering most. And if you look at it that way, then the recovery is broad enough. I don't know what else you want to see, because agriculture really was insulated a bit from this COVID. Our mining sector seemed to have also been somewhat insulated. So the problem was really in the services sector, and that's where we are seeing the bulk of the recovery taking place right now. Your last question was essentially on the same issue, that Elon raised on the private sector and the measures that would the Bank of Ghana needs to put into place to ensure that the lending to the private sector, improves. Yes, the central bank has instruments at its disposal that it can use to compel the private sector to lend, but we are being cautious at this point. The intention is not to create more NPLs. If we think that we've reached a point where the NPL situation can be managed and we think that the banks are probably not responding as they should, yes, we have instruments that we can use to compel them to do it. We have discussed this at the last MPC meeting.
My name is Norvan Akwa-Hayford. I write for Norvan Report. My question, Mr. Governor, is on digital currency. I know very well that some time ago you mentioned that there was some consideration in that area. I want to know what the update is with that, considering what is happening with cryptocurrency across the world. I also want to know what your thoughts are, because we know that just last week Nigeria also did indicate that they are also considering digital currency, their own kind of digital currency they want to introduce in their economy. And then two, if you can help us, a question that Obed asked, if you can give us figures as to the recovery that has been done with the banking sector cleanup. Thank you.
Hello, Governor. My name is Bobby Osei from City FM. The concluding statement from the IMF staff mission following the Article 4 discussions made some recommendations when it comes to fiscal consolidation. They speak of debts and debt service reduction, as well as progressive revenue and spending measures. What do you make of the recommendations, and where are we? Because some say that when it comes to progressive revenue, we are not doing so well. Where do you stand on that, and what steps can we take to more or less fall in line with their recommendations? And then for the Development Bank Ghana, if you can clarify, what is the capitalization for that bank? And seeing that AFCFTA, is in full force, comparing us to the frontier market, what would be your ideal interest rate band following, the pumping of, finances by the DBG into the market? What would be your ideal interest rate band so that we stay competitive when compared to the other frontier markets? Yeah.
My name is Richard Ning Anekwabe with Business 24. Mr. Governor, I want to find out from you concerning banks that have yet to publish their financials, the likes of OmniBC and NIB. What have they been telling the bank? And then also, regarding the sector cleanup, there was the talk about fit and proper.
Can you repeat the earlier question?
OmniBC and NIB and other banks not publishing their financials. What have they been telling the bank? And then also, regarding the banking sector cleanup, we were told about fit and proper guidelines, which would ensure that some persons who were caught in the middle of some of these mess would be their names or whatever we publish, so they don't take up positions in the banking sector. Has not been done because some people in the midst of this have been moving around. And then also, talking about COVID, we know that last year there was some partial operationalization of the BOG hospital. I don't know the status of that, or if you can give us an update regarding what the status of that hospital has been. Thank you.
My name is Isaac Edu. I'm with the Finder newspaper. Just a question. Can you elaborate a bit on your reference to the Ghana Cares program? What are your fears regarding the advice you gave, the time frame within which the program should be seen through to? What are your fears? Can you elaborate on that? Thank you.
Thank you, Governor. My name is Etonam. I'm with TV3. During the vetting of Finance Minister Ken Ofori-Atta, there were concerns about how much government had borrowed from the Bank of Ghana. I think the figure, if you can clarify exactly how much. And then the second question is, about a year or so ago, the Bank of Ghana indicated that it wants to start buying gold as part of Ghana's gross international reserves. How are we doing on that front? Thank you.
Okay, thank you for this next batch of questions. The first one is on the digital currency, and as you rightly put it, the Bank of Ghana was one of the first African central banks to declare that we were working on a digital currency and looking at the concept of an ECD. So yes, we are quite advanced in that process. As you know, I mean, these types of things, you have to go at it in phases. The first phase was really on the design of the electronic money, and I think that the team that is working on that has gone quite far in the design phase, and they are looking at the implementation phase. And after the implementation phase, we will have a pilot phase where a few people would be able to use it, use this electronic CD on the mobile applications and other payment applications that are currently running. And then from that pilot, we will be able to determine whether this is feasible and what sort of things need to be tweaked in order to make it work effectively. So yes, we have made progress. I think we'll be putting out some more information on that very soon. The cryptocurrency, I think we all are aware of what has been going on. We have said that this is not a regulated activity in the Bank of Ghana, so we warn the public about engaging in the cryptocurrency trade. You have seen the sharp changes in valuations of some of these coins, the Bitcoin, large swings in the value of the currency. Now, the basic function of currencies is for them to be used effectively as a medium of exchange or even as a unit of account. So when you have a currency whose value is so unstable, really, you really cannot use it effectively to meet any of the standard functions of money. And this is why I think there's a lot more emphasis on looking at digital money, which is backed by the state, backed by the central banks. So these private forms of money really are not able to effectively perform the functions of money effectively. Then your next question, Mr. Hayford, I believe, was on the recovery of the banking sector and the cleanup. I think you wanted the data, right? The data on how far. I have had a lot of data this morning. I think we should make this available to the press that is here. There's a lot of detailed information on the recovery, 1.7 billion so far recovered. But we are looking at total assets of over 10 billion. So really, we are very far. 25 billion, right? So if we have only been able to recover, just 7% of the work has been done. It's not very encouraging. And part of this problem, again, is what is going on in our courts. Things are not moving as quickly as one would have expected. So I would ask that the data on this cleanup is shared with those of you who are here so you can look at it and do the stories on that. And the question on the IMF, really on the budget, I think you should, when you get the opportunity, ask that question to the Ministry of Finance. It's about the revenue and fiscal issues, which really is not the function of the central bank. There are recommendations in there, a key one being the issue of exemptions and the need to rationalize exemptions as a way of improving, the revenue to the budget. And I think those are all very useful recommendations that we have had from the IMF. Then the question on Development Bank, and you went in straight into this issue of interest rate band. Where do you expect interest rate to be compared to frontier markets and all of that? Which for me, we need to manage expectations that the Development Bank is not coming in to give you free money. The Development Bank is a bank that is being put together, to do things differently from the way that the old development banks have operated, which has landed them in the type of trouble that we see with the NIBs and the other unsuccessful, development banks. The idea is to do it differently. And one of the different ways of going about it is to have a wholesale bank. The wholesale bank that would be on lending to, participating financial institutions, which would, I believe, would be the commercial banks, right? And a lot of the lenders to this new development bank, the international financial institutions, the World Bank and others, are keen to ensure that the resources that they put into the bank are directed to the use for which the funds were provided. And the key object also is to ensure that it does not provide distortions in the financial sector. So the resources would be lent at market conditions. These are resources that would be lent at market conditions. I think for me, the positive thing about the development bank is the fact that we are going to see a larger supply of long-term, money, which is what, in the domestic market you don't tend to find. The SMEs and the banks are borrowing 1 year, 2 year tenor. Now you have the possibility of getting money that will be on lent at the medium term, 5 year, 6, 7 year tenor. That alone should make a major impact in terms of extending, the repayment period, for the facility, and therefore should help some of these SMEs in terms of the burden of servicing loans that they take. But let's move away from this idea that this is money that is coming, subsidized money that is coming, and we want to see what the interest rate band will be and all of that. I don't think that's the idea. The key objective is for the resources to be lent at the current market conditions. Now, the issue of the AFCFTA and interest rate differentials. And I've heard this argument being made at the forum. You take the safer zone countries, for example, because of their pegged exchange rate, interest rates are probably lower than you see in countries such as Ghana, and therefore represents a source of, disadvantage for Ghanaians. But you have to look at it also in terms of the currency. If you take the overvaluation that you are getting from the CFA, that also makes the currency, a source of disadvantage for countries in the Francophone zone. Ultimately, I think the key point that I think needs to be made is that if we did have a common currency in West Africa, or even a continental currency, that would obviously facilitate this whole AFCFTA arrangement, and then the currency differentials will not become a source of distortion in terms of its impact on trade. Fourth question, NIB Omnibus not yet published their accounts. I understand they have submitted it to the Bank of Ghana, and It's being reviewed. So if that satisfies you, hopefully they should have that published soon enough. And then the issue about the fit and proper guidelines. Your question was whether a list of people who were not fit and proper has been published. To the best of my knowledge, that hasn't happened yet. But we do have a database. The Bank of Ghana receives applications for the approvals of directors of banks and rural banks and SNLs and all of that. And when those applications come, we obviously, the immediate thing that is done is to check whether the person is fit and proper on the basis of the recent developments that we have seen in the sector. And I can assure you that there have been a few people who have not been approved because of the fact that they have found their names on this list of people who are not fit and proper. So yes, it has not been published, but it's a very important part of the assessment that we do in approving directors for the financial institutions. Bank of Ghana Hospital is almost fully operational now. We moved the bank's clinic there, so at least for the staff and pensioners and retirees, they're all being looked after at that hospital. I think that we probably would have to do some small formal launching just to know, for the public to know that the hospital is open. And hopefully we should do that by the end of next month. Now, I find this question on the reference to the Ghana Cares program, why we think that is a source of risk. I mean, it's the same reason why we think the wage settlements and issues of energy settlements and all of that a source of risk in the outlook. Because in the past, these have been the sources of the challenges to the implementation of the budget. We have seen, very large increases in energy payments. We have also seen wage settlements also being another source of, on the basis of past behavior. We're all hoping that going forward, these traditional sources of pressures would not be as they have been in the past. I mean, we are seeing the ministry now sign these agreements with the various sectors. And we are hoping that at least those agreements would put a cap on how much money goes into the various sectors. But you and I know that when the pressures build up, sometimes we exceed the budgetary targets that have been allocated for that. And really, this is really the reason why that was also cited. Then TV3, you talked about government borrowing from the Bank of Ghana being the start that we vetting and all that. I thought we had clarified that issue, that the Bank of Ghana had not exceeded the borrowing that we had made. We had told the public about in 2020. This was the 10 billion COVID-19 bond that was purchased, I believe. But the number that had been used in the budget included all claims on bonds issued by the government, which this also included bonds that have been issued for the financial sector, right? So if you added all of that, bonds that have been issued, I think the first one was done for the CBG, there was another one done for the SDI, which was monitored by the Bank of Ghana. It's when you put all of that together that I think the number jumped to 20 or so, and everybody was like, wait, where in the Bank of Ghana how come they have led so much to government when we thought that they had done with it? It's because they didn't get the definitions right. The rest of it was due to some of these other financial sector interventions. So that should clarify it for you. On gold acquisition program, yes, we are still on course. I'm trying to, buy gold to augment our foreign exchange reserves. I think we can also share, if you have any write-up on where we are in the process, I think we can also share this with the journalists. The gold is a delicate asset. We want to make sure that, before it would even be accepted in the international banks, it has to be properly certified, issues on where the gold was bought from. All of those things require a lot of due diligence work to be done, and this is where what we have spent our time on, trying to ensure that we do not buy gold that we cannot offload onto the international financial institution because we have these gold that have been bought from people who have unsustainable environmental practices and all of that. These are some of the considerations. Yeah.
Thank you very much, sir. My name is Boedi Daily Guide. We recently read in the newspapers that there was an easy calm at ARB Apex Bank. The problem was that some of the staff were against the possible extension of the tenure of the MD. And they also made certain allegations that he breached some compliance, whatever. So we want to know what the situation is now. Are the allegations true, and what is happening? Thank you.
Good morning, Mr. Governor. My name is Maurice. I work with GTV. So recently in France, the president called for debt cancellation for African economies. I recall in one of your virtual addresses, I don't remember the particular event, you were concerned about the signals that debt cancellation brings to economics like that of Ghana. Even after the president has called for cancellation, do you still have those concerns that we don't need debt cancellation at this particular point? I also want to know what you will do differently as a regulator to ensure that our new National Development Bank stays true to its objectives of a National Development Bank, that it doesn't suffer the fate of the previous development banks that we've had. Thank you.
Thank you very much. My name is Justus. I work for Silva. Since you said we should congratulate you on the 100th MPC meeting, I'm sending my congratulations. Then my question is linked to that. You said some of the things that the inflation targeting has helped us to do, but I would like to know in which particular ways has inflation targeting helped in our macroeconomic fundamentals, in the stability. But you also agree with me that all has not been rosy. I would like to know what particular challenges the central bank faces in implementing the model as we go along. Thank you very much.
Thank you, Governor. My name is Akro Moses. I report for Bloomberg. You seem to suggest that you were riding on the tide of a huge drop in inflation from 10.3 to 8.5, and also the fact that there's an influx of foreign investors into government debt, local government debts. And on the back of this, you cut the rate. How do you marry that with the monthly inflation that seems to be on the rise? Last month's monthly inflation was 1.5%. That's the highest in almost a year. It's about 11-month high. And if you also think that the taxes that were implemented from May 1 are yet to have the full pass-through effect, have you not jumped the gun? And how do you marry the two? Given that we all know that the base drift effect will still keep our inflation somewhere within your target, but the monthly may be quite troubling. How does that work? On the ARP Apex Bank, you are supposed to be giving them some 23 million for the purchase of some bullion bonds. if that's the case, are the terms available for all? Congratulations also. Thank you.
Yeah, the issue about ALZF Bank and the tenure of the MD, I think that his contract ends after some time. So there are so many things going on. His contract ends next month. His retirement, mandatory retirement date is in July. There has to be a process if we are going to find a replacement for him. So we have asked that his tenure there should be extended at least to the end of this year, right? To the end of July. So this is what we have done. And all of those allegations, I think, are still being investigated by the Bank of Ghana. I haven't seen the report yet. So I believe this is the reason why we asked for the extension to July, by which time we will have the feedback from those allegations. And then the bullion bond issue, I'm not aware that we have put a figure on it. I do know that we decided to assist them with their bullion arrangements, carrying monies across the country, but I'm not sure that there is a value of that assistance. Now, this question on debt cancellation for Africa, this is something that I think all of Africa shares, that if you look at the global financial architecture, we seem to be disadvantaged. You would recollect that all of us were countries that were classified as highly indebted poor countries at one stage. This stage seems to have gone. And we worked our way through effective policies to take ourselves out of HIPIC. Ghana, for example, had a record, graduation from the status of being a highly indebted poor country. And by 2007, we had almost all of our debt cleaned up by the international creditors. Now, between 2007 and now, our debt has gone right back up to where we were. It seems to suggest that there is some underlying difficulty with the way the international financial architecture works. And this is the reason why we think that the issue of debt cancellation is important for all African countries. But the concern regarding the impact of, asking for forgiveness is not my concern. This is a concern that all of us have in the economic management team, because this is a country that is borrowing on the international capital markets, and we wanted to preserve that access to the market. So I believe that the facility, the debt suspension initiative that was done for low-income countries, Ghana did not apply. And the reason why Ghana did not apply was because we were about to issue, this sovereign bond, right? It was just last year. And therefore, it's improper to characterize that as the government view. This was a view shared by all those of us involved in economic management to preserve, our access to the market. And true to that, we have been able to successfully issue $3 billion bond in 2021. The question on what is the regulator going to do to make sure this EU national development bank works. I'm sure you're aware that the Bank of Ghana was very much involved in the discussions regarding this new development bank. The bank was part of the team that drafted the supervisory and regulatory framework for the Development Bank of Ghana, and I believe the act that has been passed for development finance institutions, the Bank of Ghana, was very key in drafting that act, which has been passed by Parliament for all development finance institutions. So yes, the central bank has a big role to play because this is a bank that will be supervised, consistently with the way we supervise our commercial banks. And we will hold them to the same level of standards that we are holding the commercial banks to in terms of corporate governance, in terms of everything that is done. In some of the cases that I have seen and the way the development bank works, before you can become a participating financial institution, you have to be cleared by the central bank. So even in terms of the financial institutions that would be able to do business with the Development Bank of Ghana, these will be institutions that must have been licensed by the Bank of Ghana. These are institutions that must have directors that are fit and proper. All of the gamut of things that the central bank does to ensure that, we are able to, have more efficient intermediation by these financial institutions. So yes, the regulator will be key in ensuring that things are done differently. Then justice comes in with the question on the IT inflation targeting framework, which my deputy said this is going to be a whole lecture. And really, I think that we can have a whole lecture on the inflation targeting regime since the bank adopted it. The director of research should organize this lecture for the journalists. We are convinced that the inflation targeting framework has worked. We were having double-digit inflation rates. We were trying to, at the time, manage our monetary targets as a central bank. We were going out there to the word more liquidity. This was one of the key words of the central bank because we needed to meet some liquidity targets, and it was even beginning to impact on the finances of the bank because just taking out the liquidity at the interest rates that we were operating with was an expensive business for the bank. And we have seen that now we can even have liquidity levels of 30%, reserve money growing at 30%, broad money at 30%, and inflation is at 8.5%. So that tells you that there is something else holding our inflation rate other than money, right? And if you look at the framework, the emphasis is on, expectations and the ability of the central bank to anchor inflation expectations. This press conference is part of that framework. We have given you a brief on where the economy has gone. We are explaining what the outlook is. We are helping you to form expectations about the future, right? And we think that that level of transparency, has helped really in stabilizing, prices generally, and through that we are seeing better growth performance also. But as she said, this is a whole matter for a big lecture for the director of research. We will show you all the graphs, pre-inflation targeting, post-inflation targeting, and then you judge for yourself. I don't agree with your reading of all of this. We are not riding on the back of the drop in inflation. We are riding on the back of the developments in the economy to bring the policy rate down. Yes, we are doing this at a time that we are very solid in terms of the level of reserves. So yes, we have seen non-residents put more money into the economy at this time. Your sources of concern, monthly inflation rates, recent tax increases, we are saying yes, we are aware of these changes, but we don't think that this would necessarily lead to a spike in inflation.